This podcast is made possible by Vena.
Hi, this is Howard Wilson, CFO of PagerDuty, and you are listening to the CFO Thought Leader.
This is episode 864.
For me as a CFO, starting to talk to investors over time, but I want to be able to talk coherently about how we make decisions, how we decide where to deploy capital, where we invest, what the return is from that, and why they should feel confident that we're the right place to put a few million pounds to enable us to accelerate growth. So that FP&A function is a key thing, which I think would already been recognised, but obviously I bring a lot more experience of having been there and done it in other organisations and seen it as, I've worked on the other side in other functions and had a finance business partner and seen what's needed to really make that work.
Hi, it's Jack. On today's show, we speak with Stephen Mitchell, CFO of Redgate Software. Back in 2013, Stephen Mitchell had been working only a few months for Irish telecom company Eircom when his weekly commute to Dublin, Ireland, from his home in United Kingdom, became upended by an enticing job offer. It seems Eircom's CFO was prepared to appoint Mitchell corporate finance director, an appointment that would lead Mitchell to oversee the company's investor relations, treasury, M&A, and CapEx committee. The consequential appointment came as Eircom was making the business case with its board and investors to lock in a first-mover advantage when it came to the rollout of a 4G network across Ireland. Beyond his new functional responsibilities, it was clear Mitchell was now expected to rally his internal finance team and bring forth the financial insights required to move the business case forward. Redgate Software CFO Stephen Mitchell takes a look back at that chapter and much, much more for us on today's episode. We begin after this. Managing multiple spreadsheets, disconnected data, numbers you just can't trust. Your finance team can't be the strategic partner your organization needs right now with obstacles like that getting in your way. Vena can change that. Vena brings people, processes, and systems together in a single collaborative analytical platform so you can drive connected business planning and better decision making. And it's the only native Excel complete planning platform built for Microsoft 365 with Power BI embedded. With Vena, your financial and operational data is always connected, and your teams are always armed with insights and time to focus on what matters most. So when the stakes are high and the margin for error low, plan with agility, plan with resilience, plan with Vena so you can be prepared for whatever comes next. Visit venasolutions.com/planningaces to learn more about how Vena will help you plan for anything. Hello, we're speaking with Steve Mitchell, CFO of Redgate Software. Steve, good morning. Welcome.
Hi, Jack. Great to be here. Thanks for having me on the podcast.
So we always begin, as you may know, Steve, by asking our guests to look back for us and trying to identify and share some of those experiences they feel prepared them for a CFO role. What would come to mind for you?
Yeah, I think, depressingly at my age, it's a long way to look back when I think back to the start of my career. But I started out in the late 90s. I trained at Arthur Andersen in a regional office in the UK. And regional in the UK means that while you're in a huge firm, the size of client that you have, can be pretty small or can be huge subsidiaries of international businesses. So, decent sort of variety in there. But after my 3 years there, I left and went backpacking for a year. And I thought I might go back. I'd enjoyed it there. It was a great firm to work for. But by the time I came back, Enron had happened and Anderson's just didn't exist anymore. Which with hindsight is probably a good thing for me, because I think really it enabled me to stop and think, hey, what do you really want to do next?
And, it's interesting. You're not alone. We've had a number of finance leaders recently who the collapse of Anderson is their first chapter in business. So this class of finance leaders in the last few years, the people who've ascended into the role, many of them, that's their first chapter. Could you maybe share a little more detail as to what your experience at Anderson was? And it's interesting, again, you're on the other side of the Atlantic having the same experience most of what were, I think, Americans who were sharing their first Anderson chapter with us.
Yeah, I mean, we can talk about it. Yeah, for me, I think that consistent experience at Anderson that you talked about, Arthur Anderson was very direct and very clear in its recruitment. I even now remember the statements in the graduate recruitment brochure. It was, "We're a work hard, play hard culture. Shrinking violets won't bloom." It was kind of alien to me because my background, I didn't know anyone who'd even been to university when I was growing up, let alone gone on to do their CPA or ACA or been in a big firm like that. So it was still a little bit alien, even as I was kind of coming out of university. But I was just attracted to that. Yeah, I'm happy to get stuck in. I think it just really zeroed in on, they used to talk about the culture at Anderson's, I guess, if anything, maybe being a bit too homogenous, because it really did attract those sorts of people. And for me, it felt like a risk going into that environment, because mainly it was people that had come from very different backgrounds to me. And it was all totally new from my perspective. But I did my 3 years of training, and genuinely, I had a desire to go traveling, and I'd never had the money to do it when I was younger. And I suddenly had a little bit of money. I won some prizes in the exams, in the accountancy exams, which meant that Anderson's gave me some money as a kind of bonus, and that effectively funded me being able to pay for round the world tickets for me and my girlfriend at the time. So it didn't feel like a big decision really, because I had great relationships in there, and I felt like I could come back again. And obviously I was at a level in the firm where I had no clue Enron was coming, or there was any sort of issue even rumbling when I left. It was just, I'd actually moved into the London office. I was in a much bigger office at that point, getting used to that. And I just decided, hey, I want to go do this thing that I'd always wanted to do. And it didn't feel like a biggie. But like I say, it just literally at that point, everything happened. And, this was back before you had internet on your phone. I might not have even taken a phone with me. So it wasn't like I saw it unfolding and realized the gravity of it. As you said, this firm that had been around for decades and was probably the highest growth among what was the big five at that point. It had gone from 6 to 5 already. It probably didn't, it felt like it was momentous to me because I knew the firm, but I didn't realize how momentous at the time it was in the industry to have a name as respected as that disappear, pretty much overnight. It was, it was a much bigger thing looking back than it felt at the time.
Well, I gotta imagine you thought, wow, I'm glad I took that trip when I did, because as you return, the environment does change on a dime, and the economy's in this very uncertain time after the dot-com implosion and the Enron headlines. What's next? Where do you head, and what is your mindset at this place in time?
Yeah, so I think the things that sort of shaped what I decided to do next was having really tried hard in practice to do something that actually impressed clients, that actually changed their decision making, or coming up with recommendations and management letter points that weren't just you forgot to rec a bank statement, but were actually adding a bit of value. I sort of looked back and realized those were the bits that really kind of got me interested. So that prompted me to move into into kind of a more commercial finance role in a business that was at T-Mobile. And really that whole chapter, I spent nearly 10 years there. And I started out in a sort of commercial finance role, a finance business partner role, we'd probably call it these days. And through my time there, I moved into then more pure commercial roles, and I moved I was the chief of staff to the CEO for a couple of years. I did a strategy role. I ran a P&L and sat in marketing for a couple of years. So I think that just the breadth of that experience really sort of set me up to be the type of CFO that I could be. And others obviously have a different path and maybe a more linear path through finance and to a group controller role or a divisional FD role. My route was way outside of finance through those years. And probably if I'm picking a couple of things that really, when I look back, stick out as I guess the things I still remember as building me into a leader. Firstly, doing that sort of chief of staff role, and it got called different things in my time in it, and I got referred to as Smithers quite a lot. So you have to put up with some stuff when you're in that sort of role. But I was a guy in my probably late 20s at that point, and I'm suddenly I'm organising the weekly exec meetings when we have the quarterly review with Deutsche Telekom coming over from Bonn or us going over to Bonn. I'm pulling the papers together and trying to drive some coherence across the exec team. So just getting exposure to that breadth of things at that stage in your career, I think is what I look back as a really key couple of years for me, and working with some great leaders in that time.
You were excelling as being a cross-functional sort of administrator as well, someone who was taking on the responsibility of bringing all these parts of the business together. Is that accurate? Or is that how you saw yourself?
Yeah, definitely that was a part of it. But I felt a weight of responsibility, I guess. So, for example, we had a capital expenditure committee. The CEO couldn't always get to that, so I represented the CEO on the capex committee, driving those decisions with the CFO and some of the other senior leaders. Which, in any other role at that stage in my career, I just wouldn't have had that exposure. So, and I think it gave me an insight into, when you're making your way up, you want to be a finance leader. You're in maybe a junior manager. You're still at a stage in your career where you're thinking you want to do something with the sales commission structure, and there's an IT system for that, and the IT team need to do so. And you're thinking, come on, if I can build this in a spreadsheet, why can't you just get it done next week? Why is it on a roadmap for? But suddenly when you're in those exec meetings and you see the 1,000 other things that the IT director's got on her plate, and the fact that everyone's screaming at them and their team because everything's a priority, then you get an appreciation, I suppose, more for the pressures that are on other teams, and that enables you to, as you then become a leader yourself, you've sort of already got that awareness, and you're not shocked by it happening to you, but also it helps you deal with other leaders, in a, I guess, probably more effective way.
Can I just make an observation too? It seems to me you very quickly moved beyond the accounting function within these companies. You quickly got beyond it. What I'm suggesting is it happened within the first few years. Maybe it was longer. Maybe it was 5 years. I don't know. But what would be the?
I did 2 years. 2 years I was in the finance team, and then my next role was outside of finance, reporting through to a different exec member. So
how did that happen?
I think probably the other learning, when I think back to that period, there was it's a really sort of simple thought in some ways, but I looked around at people when I joined that company, and I gained some experience over that first 12, 18 months. I looked around and I could see, even in an organization that scale, and in the UK then we're probably 4,000 or 5,000 people, there were kind of maybe 8 to 12 senior managers, so not exec members, but senior managers that were a few years ahead of me, and a level or two ahead of where I was in the organization. But they were what I sort of thought of in my head as the usual suspects. When there was a big project, there was a big cross-functional initiative or something that needed really driving, there was this kind of group that seemed to be the go-to people that would be gathered together by the exec team, because they were the people that could get things done. They could work cross-functionally, and they had different styles. But I try to look at those people. My line manager at the time was one of those people. There was a senior leader in finance. She was one of those people, and I'd be looking at those people thinking, how do I get in that group? What are they doing? And I kind of consciously worked towards that, step into things, take things on, and be willing to try things. And I think that was it, really. It was I wouldn't say at that point I had a grand career plan. I probably was still thinking, well, I want to be a public company CFO, because that's what we all think when we come out of those, those big four firms. When we're 25 or whatever we are. But I think that just sort of stepping into things and being willing to think completely beyond finance at times and show you can do that. And it was a little bit gradual. My first role outside of finance was still a sort of commercial decision-making driving role. I was structuring commission schemes for sales channels and working with the sales guys, but I was still sort of, from their perspective, the numbers guy a bit. But I sort of stepped into roles that gave me exposure around the business, and I think that was what helped me sort of then have other opportunities.
Now, you do grow into this sort of more of a strategy executive, I would describe you as, in the years that followed. You can clarify for us.
I think so. So it's certainly a lot of those leadership roles in the last few years when I was at T-Mobile, and as we went into, in the UK, T-Mobile merged with one of the other networks, Orange, and that created what was then the largest mobile carrier. And at that point, I was running strategic planning. So again, there were, it was there was a lot of number work involved and analysis, but it was more, the CEO kind of asked me to do that role because he could see I'd had that breadth of experience. I'd sat in marketing, I'd run a P&L, I could call people out when they were sandbagging, and I'd been and sat with customers, and I'd been and sat with channel partners, and so I just kind of had something a little bit different. And different people want different things. At that point, that was really useful. At other times, someone who'd had a more linear career would have been exactly fit for the role. But luckily for me, it kind of happened at that point that they wanted someone with the experience I had.
Well, that was certainly a period of accelerated learning for you that no doubt got you closer to the CFO office. But are we on the path yet, or are there more boxes to check off?
I think there's probably one other thing when I look back to that period and it's about the journey to a leadership role, not necessarily specific to CFO, but at a certain point, I was part of a team, and I was in the sort of broader leadership team at that point, but not the exec team. And we had a couple of new exec team members come in that were just great leaders. That they weren't functional leaders; they were in lockstep, and they led us as a cross-functional team. And I think that whole sort of shadow of the leader piece, I think as you think about becoming a leader, and I've heard others say it on your podcast before when I've listened to episodes, like don't be a finance leader first, be a business leader first. And that's something I still hold in my head now, 15 years down the line, what it was like to see a leadership team act as a team and think of them like that, and expect that they're not going to undermine each other outside of the room. They're not just thinking about their function. They're thinking about the good of the business and the growth of the business. And that was a big thing, kind of experiencing that for me in thinking about how the type of leader I wanted to be down the line.
Excellent. Great background there for us. We're curious then, when you do step into a CFO role for the first time, how does that come about? And again, you've had multiple CFO tours of duty today before arriving at Redgate. What would you tell us about that transition into an actual CFO appointment?
I think I'd been through a period in my career after that 10 years at T-Mobile. I'd been through a period where actually I stepped back in more to finance roles, and I was a corporate finance director for the for Aircom, which was the sort of the biggest telecoms company in Ireland, and I think that gave me a whole new breadth of experience and a ton of confidence. Like the things that happened during that role, it gave me a ton of confidence that I actually could do it. And having spent so long outside of finance, you start to doubt whether even if you want to be a finance leader, will anyone give you that job? And I think that first year, I spent I was appointed as interim CFO of that business, I was with a management team that I knew, a CEO that knew me well, a board that knew me well, investors that knew me well. And I think that, that ended up lasting for more than a year. So then by the time it then came to a permanent CFO appointment, I sort of felt more than ready. So that was sort of how it happened.
So we might have a few more career-related questions for you, but right now let's find out about Redgate Software. What does this company do, and what are its offerings today?
Sure. Well, we're a software company. We're based in the UK, but we've got offices in the US, Canada, Germany, Australia. But the majority of our revenue actually comes from the US, despite the fact that we're headquartered in the UK. So we're a fairly small business, about 500 people, and our products are focused on databases. So our software helps organizations sort of balance the demands that they have to deliver their software internally quickly, with the need to sort of preserve and protect the business critical data that sits alongside that software. So we're a B2B. We're entirely B2B. The main users of our software at the moment are in the IT team, usually the database administrators. So in a lot of senses, we're fairly niche, but the volume of data that businesses hold obviously is exploding, and a lot of organizations now, probably alongside their people, class their data as one of their most important assets. So being in a position as a business to support them in protecting that data and in making best use of it, feels like a great place to be, and naturally a growth place to be as well. So that's what we do. A lot of our customers are enterprise scale businesses, but we're only just starting to really sell enterprise scale deals. Our history was more sort of download, try, buy, individual license sales. So we've been evolving as a business, but that's broadly what we do.
For our listeners and for myself, in my way of thinking, what you just shared is this is a software offering that helps companies access their databases in a more efficient and risk-free manner. So it's a software that helps the organization talk to the database back and forth. How's that?
Yeah, I mean, I think, and don't worry about getting technical, because I won't get too technical because I'm not a technical guy myself. But yeah, if you think, when you're making changes to your systems internally, you've generally got a set of, if we think about the finance system, you've got a set of fields, you've got a ton of data in them. If you want to add a new field, or you want to add a ton of new data, or you're going to make a change, the IT team's going to do that. They don't just go in and deploy a change. They have a test environment. They test everything. They probably get you in to do the UAT, make sure that all works, and then they deploy that change into production, and then you can actually use it in your business. And I'm simplifying, but we help businesses with their agility in deploying those changes, in making sure that the risk is low, and that they can use, I guess, what tends to get called DevOps these days, as it small changes rapidly that can get deployed, while keeping the risk low, and help business agility. So that's the bulk of what our software does. There are other bits as well, but that's really the
Steve,
key.
can you give us maybe an abbreviated history of Redgate's capital structure? Who's behind this company?
Yeah, it's a really interesting one, actually. So our company is still majority owned by the two founders, and we're 23 years old. So that's pretty rare, I think, and even more rare is we've never taken any VC or PE money, and we don't have any debt. So the business has been built slowly, steadily, cautiously, you could say. But we've gotten to the scale we've got to, with the two owners still owning the vast majority. The two founders still owning the vast majority, and that puts us, and so we're sat with good growth, no debt, cash in the bank, which, coming into a period of sort of economic and financial market uncertainty, is a pretty nice place to be. And if I think back to my last 10 years, I was in a business that had just come out of administration or Chapter 11. I was in a PE-owned business with a reasonable amount of leverage that had been a buy and build strategy with a lot to do. I spent a year out of the sector entirely running a single site business that was in administration, in Chapter 11 when I got there, and it was all about bringing it out. So for me, this is, every business has different dynamics, but this is a really exciting one because you can think expansively and think about investment and growth for the majority of the time, not with worries in the back of your head about debt covenants and things.
Finance leaders, this is what finance leaders often do in privately held companies where the founders are involved. There's this guy, Steve Mitchell, we think could be the one we're looking for. The opportunity, as you found it, to step into the role, you're thinking, here's how I can add value. Here's why I'm the right person for this company at this place in time. Again, a 23-year-old tech company. It's grown slowly, steadily. It's in all parts of the world. You step into the office. How are you going to help them open that next chapter? And what is that next chapter? It's growth. Is it accelerated growth? Is it more investors? Don't know. Tell us about the next chapter you're helping open.
Yeah, so I think the next chapter for us, certainly more growth, and we've got different growth vectors that we can think about in terms of broadening our range of products, broadening the types of clients that we serve, and also geographically broadening. So there are a lot of opportunities there for us to take market share and grow with the market, because as I said before, we're in a growth market. But certainly there's a next phase, which is some sort of liquidity event, probably for some of the shareholders, potentially an IPO. The owners were pretty explicit before I joined that there was a goal over the midterm, to be ready to IPO, and that was one of the reasons why, me having been through an IPO process before, or I should say most of, because at the last minute the IPO didn't happen. But having kind of been through that and been in businesses where you're dealing with external investors and you're doing quarterly results presentations, there was an element of all of that I would bring. But also I think again that breadth of experience in some different size businesses, and being able to add value outside of finance, I think that's that was another reason why it was a good fit. And for me, I'd never worked in software, so there's a lot for me to learn. And frankly, the culture of the company was and the mindset of the owners and the board was one of the big attractions for me. So it's you bring things and you learn things, and there's a good balance, I think, in this role I've come into.
We do speak to quite a few finance leaders who step into the role, and yes, it's to open the sort of the IPO chapter or get the reporting in shape and begin operating more in a way where you can disclose numbers publicly and what have you. What is it that you're stepping into? What is the environment? As you described, this is a founder-led firm. It's where culture has taken root because it is 23 years of age. They have a way of doing things.
Yeah, so there are a few different things, and I think I've been lucky in that the finance team that was in place has some really good people in it, and some good leaders in it, some sort of well qualified and people that have got a good length of experience in our business as well and have grown with it. But probably the key things are, we're changing our finance system, and we're doing that in a sort of controlled way, and not trying to crash it through in 6 months, because we don't need to, we don't need to take the risks and that might entail. But we're doing that, and then I think the other area is really strengthening the FP&A function and the support that we're able to give the business in driving better decisions. And it's not directly related to IPO prep, but certainly for me as a CFO, starting to talk to investors over time. But I want to be able to talk coherently about how we make decisions, how we decide where to deploy capital, where we invest, what the return is from that, and why they should feel confident that we're the right place to put a few £1 million to enable us to accelerate growth. So that FP&A function is a key thing, which I think would already been recognised, but obviously I bring a lot more experience of having been there and done it in other organisations and seen it as, I've worked on the other side in other functions and had a finance business partner, and seen what's needed to really make that work. And then, yeah, there are some other bits. We've put in place a long-term incentive plan across the organisation. So there are other bits that we're putting in place that we think will set us up nicely. But for most people around the business, because there's been talk of an IPO, a question I get asked a lot is, what should I do towards the IPO? From people in customer services or sales or wherever it might be, and generally the answer is, do great things for our customers, do a great job, because then we'll be a great business. It's not that much more complex than that, really. The rest of it will take care of itself.
So the we always like to ask about your lines of sight into the organization. And I suspect this is a SaaS offering, so it's all the unit economics that we hear about so often. But what I'm always looking for is maybe a business dynamic that, since you arrived, you have raised the profile of. And I'm keeping that really broad because I have no idea, but maybe you realized, and maybe it was expense related, maybe it was just related to the customer experience, that the organization need to be educated more or informed more regularly. Is there anything you've done to raise the profile of a certain metric or business dynamic to bring it to the attention, whether it's the attention of management or across the organization more broadly? Anything you could share?
Yeah, I mean, it's an interesting time in our business, because we're not quite where you described, in that we're not all SaaS subscription based. We're actually just going through, or were last year, just going through the transition from being largely selling perpetual licenses to a subscription model.
On top of an IPO, you're beginning that journey. So that's a
And so, we've accelerated through that, and that's the advantage of being in the position we're in, privately owned and without immediate financial pressures, is what that does to your cash flow and EBITDA. We've been able to move so that by the time we reach January this year, 85-90% of our sales and renewals are onto subscription. So we're kind of going through that transition quickly. And of course,
how quickly did that happen? I mean, that must have begun before you arrived. Then 90%.
Yeah, the decision was made before I arrived. The work was underway. We were just launching with more subscription products as I arrived, and so a lot of what I've been doing is sort of teasing out the dynamics of that, and how do we execute that really effectively. And from a customer perspective, software vendors moving to a subscription model it's a well-trodden path, right? We're not blazing a trail. We're doing it in a customer-friendly way. So customer acceptance, that's been fine. But for our business, suddenly we're not looking at total contract value anymore as our key metric. We're looking at annual recurring revenue and the growth in that. And you sort of said about the business dynamics and that sort of line of sight. And I think, taking those explaining that top line metric of annual recurring revenue and why that's important. And I'm sure your listeners will know all about that, so I won't go into that now. But really, the importance now is digging beyond that into the operational metrics that drive that. So, customer retention is a key metric in driving lifetime value and in increasing the annual recurring revenue. So, when we look into that, we see that actually, for some of our products, any customers that were leaving, it wasn't because the product experience was poor. It was more because their onboarding, they weren't using that many of the features, and they weren't seeing as much of the value as should be there for them. And therefore, we look at those KPIs and then invest in building a customer success team to make sure that customer onboarding is right, with a view that that's going to drive things. And then we can measure that team on, how much of our customer base are they covering? What's the customer satisfaction of the customers that have got a customer success manager dedicated to them? And we can kind of ladder that back up and see how that's driving the overall. And obviously, so can the people in that team. So can our software engineers when they're, we have a value around ingenious simplicity, keeping that top of mind for our product designers and our software engineers, because they can see how that ladders through to customers making more use of the product. Therefore, they stay. Therefore, we grow. Therefore, we can continue to invest. And really just sort of pulling out there, that's one thread. but having those threads through the business. So obviously what you want is people having line of sight to how what they're doing day in, day out is ultimately impacting the success of the business and those top line company metrics.
The customer success team arrives along with the subscription model, more or less, right? That's one of the key components of a customer centric organization, really. Is that right, or did it exist before or prior?
I think it was starting to form before that, but I think probably the more important change, rather than strictly the move to subscription or onto SaaS, it's more the scale and complexity of the product and the scale of the deals that you're selling. So when you're historically, we were a download, try, buy business. So 5-6 years ago, you'd go onto our website, you'd download it, you'd buy something, you might buy 1 or 5 licenses, and it's a few $1,000s a year. Now we're selling, $500,000 a year deals at times. You sort of get into a scale and a world where it's not acceptable to, if you're the CTO who's just made the decision to spend $500,000 a year on our products, it's not going to be acceptable for us to just say, there you go, good luck. So I think that that's more the dynamic, is that scale and really, really kind of wanting those customers that are really investing and committing to us to succeed, because often you can obviously go with a land and expand strategy. There's often a lot more we can do for those clients over time if we help them get the first bit right, and a lot more ROI that they can gain.
I think it's in a company this size, it might be interesting to learn that the types of conversations that do go on with customer success in mind, and how do you, as the finance leader, sort of have that discussion? Is there a organizational gathering of some kind of meeting or regular discussion of customer success that perhaps you participate in once a month? Every organization's different. So
that's right. Yeah. So we have organizational targets and goals, or they're OKRs in our business, objectives and key results, and the customer success components of those. We get regular updates to our management team on those, but also we have regular readouts from from different teams or major projects around the business that me and the rest of the exec team are able to join and ask questions and sometimes provide answers and a steer as well, obviously. But for me as well, it's as a CFO, you don't always naturally speak directly to customers very much, and what I found in my previous role, I signed up for being an exec sponsor on some of the key clients, and that meant that I was spending time with clients, and they, obviously it's a different conversation than our technical people spending time with them, but I would have an hour a quarter, say, on a call 1-to-1 with the CTO in 3 or 4 of our larger clients, and so I mean that was a really good experience. But that's also something I'm looking to do here, and also we do the organization is very customer centric. There's a lot of research calls go in with customers, and they get posted on our intranet, so I'm able to go in and pick up recordings of our product teams talking to customers about how they're using our product, what else would be great, and just, even though I'm not live in the conversation, hear directly from customers what they're saying about our products. And I think that I can then hold those things in my head going into those discussions with the customer success team and the renewals team and so on. So that's how I try and approach it, is try and get some direct exposure to customers.
Really, really interesting and helpful. I'm certain many finance leaders are trying to get greater visibility routinely.
I think the other dynamic as well, for finance leaders, is depending on what your business sells. But for us, we're selling into mid-size and enterprise scale organizations. We're starting to sell larger deals. We're starting to sort of trip into the scale of purchase where the finance team gets involved on the customer side. The FD or the CFO or someone is going to need to sign off this spend. And so that changes the dynamic a bit as well. And we actually, I ran a session. We have an annual training day that is, all of our people with sessions delivered by our people for our people. I ran a session there largely for the sales guys called Selling to the CFO, to try and talk to them about, well, how am I thinking about it when you get pulled in by your business kind of sponsor in that potential customer. But hey, the CFO's just had a one-page briefing 10 minutes before. What's she thinking coming into that, and how, and of course that session was really well attended, and I was thinking, oh, this is great. And then I realized afterwards that others from the business were there because they were trying to figure out how to get me to sign things off. So it was I was maybe played a little bit there, but that kind of thing is where, as a finance leader, you see things from obviously from different angles, and you can be useful around the business with that knowledge.
You mentioned OKRs. Had you other companies adopted OKRs? Are you familiar with them? Used them frequently in the past?
This is the first time I've used them and called them OKRs, but the process isn't too different from what I'd seen in other businesses. So we, although we're relatively small, we go through a process of setting those annual goals. We try and make sure that they ladder through to the headline, obviously the headline kind of company growth metrics, and then we track those through the year. We report them back to the business as well. And we have a quarterly reforecast process and so on and so forth. So yeah, the actual process isn't too different from what I've seen before. We have flexibility because of the ownership structure and the board we have to make changes through the year, probably in a way that a listed business, say, couldn't when they've issued public guidance. So that's a big difference, I would say.
Reflect a little more on OKRs and whether you see them as just a cornerstone now of how the company operates, or maybe not. Maybe you see them as removed from the center, really.
I think that the way we use them in Redgate, they are pretty central. So as an example, we've just closed out the financial year, and when we've got a company meeting next week, we will, the first update that we give people on how did we do in 2022 will be to review those OKRs, because they are the things we talked about through the year. But we don't see them as you say, someone's been allocated a task and a goal. It's more, we're using them as, these are the three big strategic things we're trying to do as a business this year and why, and talk about them at that level to the organization.
Yeah.
And yes, they have targets attached to them, and we want those results to come through. But the discussion is a lot more about, okay, this year, if there's an OKR around customer retention, the measure might be our retention rate going from X to X plus 5, whatever it might be. But actually, what are the things we're going to do across the business? And I guess I come back to what I said earlier. How can we give line of sight to people, whether they're in customer success or software engineering or product management? How can we give line of sight for those people to what they're doing is going to ladder through to that? So that's how we use them, and that's why I say, in my mind, you can call them OKRs or you can call them strategic initiatives, or we had 5 of them each year, generally way back in T-Mobile. They were called the Big Five. You can call them what you like. I think the key thing is about how you articulate them to the organization and how you give people line of sight between their priorities and the company's success and the company's goals.
Some great insight there for us. So thank you for that. We are up to our signature question, where we ask you to relate a finance strategic moment, something that you've experienced in the past as a finance leader. You're able to see an opportunity, maybe a risk. Anything come to mind when we ask for a finance strategic moment?
Yeah, I think I'd probably think back to my time at Aircom over in Dublin. So I mentioned at the outset, I went over there for a few months, and I ended up there for 4.5 years, I think. But that was a time for me where I moved back. I went over there in an operational role. I was effectively going over to help them drive the performance of their mobile division, which had been performing really poorly. I did that for about 6 months, and I think that those sort of operational roles, you need to live in your market and really know your customers. And I was still living in the UK and flying over each week. So I was planning to leave, and the CFO, who I knew pretty well at that point, asked me to consider becoming corporate finance director, and that would be responsible for investor relations, treasury, M&A, managing our debt, running the capex committee, all things I'd never done before. I hadn't even worked in finance for the previous 8 years. And I think that next period of 18 months or so, I mean, I got such great experience. We had a $2.3 billion debt facility, which we didn't amend and extend on. We raised a 350 million euro bond. We did a big M&A project. I was in the European Commission, defending our position, following some market consolidation, delivering investor presentations, and so on. And I think that my reflection off the back of all of that, and this was only at that point midway through my tenure out in Ireland, really, was just, I mean, for me, was just how much being out of your comfort zone broadens your comfort zone. Since that couple of years, not much has really fazed me because so much happened. But also just the breadth of things that finance can really drive, and the decisions that get made or that wouldn't get made without the right analysis underpinning it. Whether that was, we were rolling out fiber across Ireland, and we were rolling out a 4G network, and we were trying to launch our 4G network before our competitors launched theirs and be first to market. We had all of these competing priorities, for example, and a couple of really good pieces of analysis in the finance team ended up, then when we got to the board discussions, really driving the decision about where that capex went and whether we were ready for a rebrand, and whether we were, how close were we to being able to run a sale process and maybe look at an IPO. So I think, that was a period for me where I saw finance. I got a load of experience of meeting investors and seeing finance from a different angle. Some of our larger investors were hedge funds who operated in a really different way to some of the other shareholders. So seeing all of those dynamics, but I guess that piece of just standing back and thinking, wow, those things that happened in the finance team and the ability of the finance team, and it wasn't always success. Sometimes we didn't get things right as well, but just seeing how much difference that can make across the business, but also to the really strategic decisions that the board was making. And, I was really lucky. They had a great CEO and a CFO who were totally different types of leaders to me. They were 20 years more experienced than me. And I just learned so much from them. And we had a really ambitious board. And it just meant that so much could happen in a short space of time. So that was, that was a real moment where I sort of took stock and just realized the breadth it takes to be a CFO, but also just the difference that things in finance can make. And I guess that's why I always come back to that line of sight. The people working on that fiber rollout business case, they could sit and fiddle with spreadsheets for months, or they could really get the bit between their teeth and realize that they were about to drive the biggest decision we were going to make in the business that year. I think the other thing I came away from that with, which was helpful for me, given my background, spending a lot of time outside of finances, that was my first exposure to lots of we had 90 odd shareholders. We did things that needed 100% consent across all of them. So there was a lot of meeting different types of investors and seeing how far they looked beyond the numbers, and that they didn't just care about financials. We had one investor that he wanted to fly over to Ireland, not just to meet management, but to get out to one of our data centers and actually see it for himself, see how it works, to get together with some of the network engineers and see how you splice fiber, to just understand, like, we're putting 100 million euros towards this over the next year. How does it actually work? And I think that, that really gave me confidence, I guess, as someone who was still thinking, I spent so long outside of finance, how's this going to work, talking to investors, that actually you can be a different type of leader and still be really effective talking to investors and talking to the financial community and dealing with the investment banks and all of those sorts of things.
Hi, it's Jack. I hope you're enjoying our talk with CFO Stephen Mitchell of Redgate Software. Couldn't help but notice how that last chapter he shared with us at Aircom, how in certain ways it may have resembled his earlier chapter at T-Mobile, where he joins as a commercial manager and is later appointed chief of staff. As he said at the time, there was some risk he might be thought of as a Smithers. But what it reveals to us is that upper management recognized that here was an executive who was cross functional, had a talent for working across groups, skill set that's often acquired by finance people later in their careers, just prior to entering the CFO office at times. He had it from very early on. It's perhaps what he demonstrated in short order to Aircom and their CFO, just the skill set that CFO needed to add to his team as they took on this huge, ambitious plan to roll out 4G. Interesting comparison, I thought. We'll now return to our talk with CFO Stephen Mitchell. We're going to jump to our mentoring round where we ask you several quick questions intended to inform and inspire future finance leaders. We want you to think about the first time you were a CFO. And I know it was an interim role. I mean, you really, that's sort of the dream that a lot of finance leaders wish it would happen that way. In some way, the way you described it, you knew the board already, you knew the pieces. But if you were to go back in time when the CFO responsibility for the first time really fell on your shoulders, and you could go back and give yourself a piece of advice. And again, this question is designed for those finance people who are about to step into the role, who, what is it that you would tell yourself? You knew so much, but what is it that you would just try to remind or tell yourself?
I think for me, and it'll be a little different depending on, what type of individual you are, what type of leader you are, but get the right leaders in the right seats across your finance management team as soon as possible. You don't, I would say to myself, maybe not that role where I stepped in and I knew everybody, but my first sort of permanent CFO appointment in a new organization, I look back now and think, you don't need 6 or 9 months to assess people and requirements. Make the changes. It's for the good of everyone, because you don't want people that are sat in the wrong seat, that that you think maybe they can get there over a long period of time. Get the right people in the right seats as soon as possible, and that will enable you to play position. It will stop you getting dragged into the weeds. It'll enable you to be much more effective as a business leader. And so I think that's the first key thing that I would say. And the second is probably, and again, this maybe applies to more leadership roles than just finance ones, but the attributes and the approach that got you here aren't necessarily the things that will make you great now you're here. You grow up into leadership roles because you work hard, you step into things, you get in the detail. There's not a question that someone can ask you that you don't know the answer to about your stuff. When you're in that CFO role, like the step up to that, the breadth of things that you need to cover, the people you're interacting with, the context switching that you need to be able to do, it's a different thing. And I guess that probably links back to my first point. If you've got a first line set of direct reports that you can really trust and work well with, and they're in the right roles for them at the right time, that will enable you to really drive change quickly across the business.
Great. Thank you for that. We always like to ask our guests to reflect a little bit on the personal side for us. We're wondering if you have a personal habit, if there's a part of a daily routine, something you're known to do regularly, if this is more something a family member might tell us.
I think if you were to ask my family, there's probably a link between family and work, because obviously I'm still the same guy. I'm pretty disorganized. My thought process is generally naturally quite structured and fast, but the practicalities of actually getting things done, whether that's things around the house or remembering to book some, a dentist appointment for the kids, whatever it might be, not so good. And I can do it, but I have to work really hard to do it. And I find it quite draining. So in my family, one of my sisters is super organized. She organizes a lot of things that really I don't do my fair share. And there are, I hope, other things where she'll come to me for help and advice on things. And it's not that different in the workplace. I went through a management exercise, one of those sort of management style questionnaires a couple of years ago that was and it came out really clearly. It was one that there was a piece around kind of process and organization, and it had a scale of this is how you present at work, and this is your natural state. And for me, it was literally you present 70 out of 100, but your natural state is 30. And it kind of gave me a way to be able to talk to people at work about what I sort of already knew, which is, hey guys, I'm coming across as organized, but I find that really draining. So, help me out. How can we work? How can we work to balance that out? Or for me, it's about finding people in my team in the same way I've got in my family that have got different attributes that make up for that. So I'll still try, but hey, there are other things where I'm going to be more naturally kind of spending my time. So yeah, there we go.
Excellent. Thank you for that. Always like to ask if you have a book selection for us. Doesn't have to be a business book, might be something you escape with. Anything come to mind?
Yeah, I think the last book I read, a few months back, I really enjoyed. That was called The Unicorn Project, and it was written by Gene Kim. It was a book I was recommended by someone at Redgate. It's not specifically for aspiring finance leaders or any business leaders particularly. It's a novel, but it follows the progress of a sort of huge digital transformation program in a large business, and it's written from the perspective of the project managers and some of the technical teams trying to deliver that. And it made me laugh. It kind of made me cry for those people and for, I guess, thinking back to my experience of those projects at different stages in my career. But I think it's relevant for your listeners because huge amounts of our investment, both capital investment, but also kind of the precious time of our best people are put into large projects or big initiatives because they're important. And then poor communication, unrealistic goals, indecision from leadership, excessive governance, all these things, get in the way. And the more you move into senior leadership roles, it's easy to forget how impactful your indecision can be, or your lack of communication can be on such a big project and a broad range of people, and can be demotivating for the very people that you really want to be motivated. So it was a good fun book. You didn't need to be too technical to understand it. I could understand it. And as I say, it really made me laugh as well.
I love it that it's a novel for a change. So thank you for that. We're up to our final question where we're going to ask you to look forward finally. And we're looking at the next 12 months. What are your priorities as CFO of Redgate?
I think as broadly, I'm cautious about the next 12 months in terms of sort of the economy and the market, especially in the UK and Europe, maybe a bit less so in the US. So there's an element of, I guess, thinking about one of my other sort of favorite novels, that thinking of Jack Reacher and his motto of hope for the best and plan for the worst. I've definitely got that in mind as CFO. But really, the priority in our business, is helping us take advantage of the great position we're in. I talked earlier about the financial position we're in. We've got no debt, we've got cash in the bank, and therefore, in a measured way, we can make investments even through what is a fairly turbulent time. So, supporting the rest of the business in executing well on those investments, and obviously tracking the return on those, and hopefully then off the back of that making more investments. That's where the priorities lie, I think, for me. And I feel pretty lucky to be in the business I'm in and to be able to think fairly expansively about things in that way, rather than having to prioritize refinancing or cost cutting. Not that we're not looking to be efficient, but I feel pretty privileged to be in the business I'm in and in the position that we're in with the team I get to work with.
Steve Mitchell, thank you for joining us on CFO Thought Leader.
Thank you. It's been great to talk to you.
Hello, Thought Leader listeners. As you have perhaps already heard or even seen, we're now featuring the career lessons and moments of strategic insight shared by our CFO guests as Thought Leader videos. You can now find these videos on our blog at at CFOThoughtLeader.com, and of course our newsletters, but also on LinkedIn. If you haven't already, please go ahead and follow our CFO Thought Leader LinkedIn company page, and you'll be certain not to miss a single Thought Leader video debut. CFO Thought Leader, the #1 thought leadership platform exclusively for and by CFOs. As always, thank you for listening.